Hey, welcome guys, welcome guys. It's another Wednesday market analysis, midweek. Today we're gonna quickly look at gold and perhaps even DXY, our benchmark currency, and just see what we're going to or how price is going to develop for the next, or for rather for the last quarter of the week, the last 2 days. So let's see what we have. Just gonna open the gold chart quickly, but before that, let's just see any fundamentals. Today, nothing much is happening. Tomorrow, we have the US dollar currency. We've got some news release there, unemployment claims, retail sales, core retail sales, month on month, and core PPI month on month as well. So tomorrow we might have some movements in the USD and any USD correlated, uncorrelated price action. And then we've got, so nothing much Friday, nothing much is happening as well. So what we have is just the unemployment claims, retail sales, and core retail sales on Thursday, March the 14th. So that's what we are looking at. Hence, just going to take a peek at our goals and as well as DXY. So just gonna quickly go top-down analysis, look at our gold charts. I'm gonna try and make this quick, less than 10 minutes. Hopefully we can achieve that. And yeah, hopefully not dwell much on the charts. We don't want to overanalyze and cloud the mind on our analysis. Because we already midweek, we're just gonna look at the daily. We won't necessarily look at the week. That's more of a long-term perspective. But we'll obviously we can identify the trend already. Gold has pretty much been bullish for the past couple of days, as we can see recent price action over here. The gold has been bullish. We've just broken this high that we had there, extreme high. So that's what we currently are. We have been breaking structure towards the upside. We can see that first break of structure there, and then the second break of structure, which we recently just broke out of. So as we all know, there are those people who normally trade breakouts and retests. So we could expect a retest. Obviously, we've already seen the way candles have been moving. We can see this candle formulation here. We can already see that reversal candle forming over there. So we could anticipate that short-term selling for gold for the next two days. So we could expect that kind of price action, even though market has been bullish for gold. So normally, obviously, I don't like trading. So if maybe the weekly bias has been bullish, the daily bias has been bullish, normally that's what you should go into the markets looking for. If you're looking for entries, you're looking to profits, go looking for the bias, which obviously has been bullish. So we could look for those bullish entries. If it's short selling, you just look for those low risk entries and continue to the upside. But of course, you trade what the market is doing, try and see the relationship between fundamentals and your technical price. So to not say much and keep this short, let's quickly just go into it. Let's first just mark down our days so we can properly and mark down this week so we can clearly see what price has been doing, how price has been moving. We're going to start today's a Wednesday. It's currently time right now is still 20 minutes to 6 for the New York session, and then obviously, or rather New York time, and then for me, time is 20 to 12, so just close to midday. Here's the beginning of our week, our Monday. Let's make that accurate. Then we're gonna jot down Tuesday, followed by Wednesday and Thursday, and lastly Friday. Okay, we're gonna mark the next Monday for Friday to have that nice gap and change the color to black, and then let's have the next week. And then beginning of this, obviously the beginning of last week, we need to obviously see how price moved last week so we can have references of price points, recent highs, recent lows, and the next drawn liquidity or any inefficiencies in price. That's Tuesday, not Monday. There we go. So this is last week's price action. As we can see, price has been moving towards the upside, breaking structures in the upside and creating those higher highs and obviously our higher lows. That's what price has been doing. That's the narrative. Price has been moving high. So we made a new all-time high, I think, on gold. So we need to mark that down. And obviously, one thing with time in the markets, normally what you can anticipate after maybe certain assets, whatever currency pair has made an extreme, okay, let's say a yearly high, a yearly low, weekly high or weekly low, you could expect market to then reverse or to retrace from making those extreme yearly highs or yearly lows. So with gold doing this similar thing, making that extreme high, that new all-time high, or a yearly high, new yearly high, we should then expect gold to, or rather price to start retracing, filling up any imbalances or targeting opposing liquidity. So that's what we possibly going to be looking at going into the markets. Obviously, price has been moving up. What we can mark now is just recent highs and recent lows, and just to see, and obviously inefficiencies, and see what we can work with. So we have this one here. This was, and I think yesterday was CPI. So yesterday, Tuesday, was CPI, another fundamental news release, and this is that candle. I think that's definitely that candle. What time was it? Yes, 8:30. So this was that candle here. So what would this candle do? See that whiplash. This is why news events sometimes are a problem. This is just taking both sides, both buy side and sell side. But anyways, that's not important. I'm just gonna quickly mark this accumulation here. Just mark that CPI high. We could mark the low, but we won't. Then the recent low is this one where price is currently at. It's going to be a place of interest. And then we have, let's grab this one. We're gonna take this low here from last week. This was last week's low. So this was last week's low. Let's mark our weekly open for gold. Okay, that's our weekly open is most definitely that CPI candle. Let's do this. In fact, it's where our CPI candle, those CPI candles high. So that's quite interesting. Already, that's telling us quite a number of things. Let's just change its color. And what we're going to do, just to show that we're able to see it, our weekly open is there. See how our weekly open is is the high of the CPI candle. So that's where, if the price went during CPI, when price went up, because price had been going down, and during that release it went up exactly into the weekly open. So the weekly open is there. So that's where price went into. So for me, I'd really expect to continue to the downside if we're already taken out that liquidity there. So my entries, I should expect entries around those margins. Anyways, okay, we've done that. We've got, now let's just mark some inefficiencies. And we've got the most recent one there. Take that one versus the one beneath it. Mark our fair value gap. Let's leave it until the open Friday. Can leave it there. Mark the price points. That's the 50%. Change that. Okay. Okay, we've marked that. And then, so we can see how, even if you are a trend line based trader, market action is quite clear for now. We've recently broken out. We've had that nice retest. We could get a nice retest again into this trend line and continue to a downside, or we could not. But from this margin here, and also if you can see carefully where price is trading now, we had a nice fair value gap there, which is where price is currently stuck in. So we're getting that nice accumulation within that area. So this could be an entry station. It's now up to you whether you want to, obviously price obviously buys or it sells. So from this point on, we could either from that margin sell from here, targeting sell side liquidity, going all the way down, or we could from this point in from this point we go towards the upside. Since we made those that new or yearly high, so we could be just making that this is a retracement, and then we continue towards the upside, making another new high. Price will determine what it does, but we go further down. Let me just check the 15 minutes and check whether there are any inefficiencies. But for me, I'm still looking for sell side liquidity. The fact that we came in during the CPI, we went into that weekly open, we didn't go above it, stayed beneath it, and I'd say and went all the way down. I would most probably target sell side liquidity at this point, but let's see what price is giving us, and let's see how price will react at certain price points. I think this is a very much important point of interest. So we have this imbalance here in the 15 minutes. That's another point of interest for me. So what price I would anticipate price to do this? It's still morning. With this accumulation here, I would expect, the power of three. I could expect what you call a manipulation first before we expand towards the downside. So what we could expect here, we could from this point, from the station, we go up there before continuing to the downside. So it's two ways. We could expect that. So that's what I would really do. So what I would do now, we just for visual effects and low risk entry. If I was looking for sales, let's just see risk 0.25 is not bad. That's the price point from 170 to 174. Okay, and then we can target opposing liquidity from this point on. Could be there. This is the lower from our low risk entry. Let's go back to the 1 hour time frame. If not, we can obviously go long all the way. These are all stations, but for now we're just gonna keep it short, quick in and out. But we're not even okay. We're gonna leave it there and see how price is going to react as we learn the markets. So these are all areas of interest. Yeah, these are areas I'm interested in. These are all targets. So the sell side liquidity here. These are all targets. So this is what I'm currently targeting. 21, 24, and 21, 100, basically 2100 for gold. And right now we're currently trading at 2160, 2158, so 2160 around this margin. So from here, I'm expecting such a movement. Fill up entries there while taking out all this accumulation, this buy side liquidity here, as well as that one. Potentially from there, target this sell side and then as well as that one. But we should ride it all the way down to 2100. That's the expectation for gold. But of course, let's just see what price is going to give us. At the same time, this could just be the retracement, and then from here, we continue all the way up, breaking new highs and making that high for the week. But of course, we'll see what market does for the next 2 days. So for this week, this is what I'm expecting. Possibly just go a bit higher, and then we can look for those short selling positions targeting to 2100. But maybe 2100 will be next week. We'll see what happens. So for now, we can target just short movements, just from there to there. Could not happen today, it could happen tomorrow. But that movement, I'm expecting gold to go towards the downside, right? That's what we're expecting for gold to continue towards the downside. Now let's check our DXY and see what price has been doing. Okay, these are all the analysis. So we'll just do some development. I did look at it for a couple of minutes. So we're just going to continue from here and see what we have seen. So I think in the daily, okay. What I want us to pay attention here, we had this volume gap here that happened around beginning of the year, 16th of Jan, 15th, 16th of Jan, but we have a volume gap there. And what did price do? So price obviously accumulated orders here, then continued with an impulse towards the upside. Same thing there, then accumulated a bit here, and then we came back down. As we were coming back down with our retracement, where did we retrace to? We retraced all the way to this volume gap that we have here. All bodies closed above that volume gap. So that's the point of interest that I'm talking about. It's the point of interest that I have. So the way market reacts here in the daily, we can see this candlestick charts. We can see that nice reversal candlestick there, that doji. So from here, what the candles are doing, you can just go down to the lower time frame. Price may indicate the fact that it could be having that bullish momentum. In as much as it has been selling, we could be having that reversal, but it's not definite as yet. So we just, when we go down into the H4, we can see that obviously that is that 50% of that volume gap there, this price point here, this 102. Look at how price reacted from here. Price has been staying above. So what we need to pay attention is price has been breaking structure towards the downside. We can see those break of structures there, breaking structure towards the downside. Break of structure towards the downside, basically price has been making those lower lows and lower highs. That's what price has been doing. And when we made that low, what did we do? We accumulated here, came to that high that created that low. We retested it, and then what happened? We have that change of character. So from making these lower lows and lower highs, what do we do from here? We didn't make another lower low, but we made a new higher, or a new lower high rather. We then made a higher lower high here, and then we made a higher low. So we then had a change of character in this margin. So what I could anticipate from this change of character, let's just go to the 1 hour. What did we get in changing that character there? We had a volume imbalance here, this fair value gap. What did we do? We came back into it, filled it up, and instead of going below and breaking these lows, we didn't. We stayed in that, and then we currently looks like we are escaping this fair value gap, which means for now we could be targeting buy side liquidity for the DXY. So from this margin, this is our first target, buy side liquidity, and then we also have the second target, buy side liquidity. So for me, what I could be looking at is this market structure. So we've had our first change of character here, this market structure shift. So from now, look, I would expect that we take out these highs as well as fill up these volume imbalance here, and then that fair value gap. So this is my, I would say, draw on liquidity. That's what I would say price needs to go fill in at 103. So price currently right now is at 102,900. So we can just say 103. That's where DXY is trading. My next drawn liquidity is 103, 180, 103, 350, 20, and then ultimately 103, 400. So 103, 400 is my next target for the DXY, and currently we're trading at 103. So that's a movement. So from here, this could have been the entries. You should be targeting up buy side liquidity. So this area is there. These highs is what I am targeting. Possibly we can exit there. So which for me from here, if that doesn't happen, then we continue with the sells, guys, because gold has, I mean, DXY short term has been selling. So, but for now, DXY bullish 103 to 400. So we'll see in the next 2 days. We'll see in the next 2 days. But these highs, these two highs here, most definitely we need to tackle maybe this week. So which really just confirms our bearish movement for gold, short-term movements, good, just targeting 2150, 150. But of course, ultimately we need to go to 21,100. That's what I'm looking at. But we'll see what happens. Could be wrong, but we'll trade. We'll see what happens in the next 2 days. Nothing much. That's it for gold and DXY, guys. All the best in your trading this week. Thank you.